In this video, I'm going to do a put on Alibaba. So the reason why I'm doing a put on Alibaba is for two reasons. One, they just had earnings. They smashed the top line. They smashed the bottom line, and it went to a low of 76.60, I think it was. And you can see here in the top left-hand corner, we're at 77.90, again, down 1.5% today. Now, the reason why Alibaba is down, in my opinion, is because of the US-China kind of conflict. And I think it's a bit of an overreaction. So what I'm going to do is try to hedge this and say, I think Alibaba is going to recover over the next couple of weeks. And looking at the intrinsic value of Baba, I think it's somewhere sitting around the $80 to $90. So it's already below its intrinsic value. I'll be honest, I don't really want to pick up 100 shares of Baba, and I'll manage this position if it does start getting into trouble. So what we're going to do is we are at the January 19th expiration, which is 63 days away. And again, I like to sell options 45 to 60 days out in the monthly cycle. And December monthly cycle is 28 days. So it makes sense for me to do this on the January cycle. Now, I want to try to pick up a decent amount of premium. So we've got two options here with the price trading at 77.97. We can either sell the $70 put for $1.43, $1.46 credit, or we could go for the 65, which is a bit more safer for $63. Now, for those who watch my videos and know how I like to manage positions, I like to manage positions at 50% max profit. So if I do the $65 strike for $66 credit, it's only around $30 here, which doesn't really excite me, to be honest, per contract. I'm going to go for the $70 strike, which I'm going to look to get somewhere between 143 and 147 to be able to do this roll. Now, key thing is what happens if Alibaba goes up, down, or sideways. So if it goes up, this option will start depreciating in value and I can buy it back for 50% pretty quickly. If it decides to stay where it is, the option price will take a while for it to depreciate, but that theta decay will tick in and the option will start losing value, which I can buy back. And if it goes down, which is my worst case scenario, is that the $145, $147 option that I sold will start increasing in value, which means that the position will be more expensive to buy back. And therefore I would be at a loss in this position. Now, if that happens, what I focus on is the delta. So if I scroll across to the right, you can see the delta in this position is 21.8, so around 20 delta, which is a standard opening position that I normally do. Now, if this position gets around the 72, 73 kind of what I will do, firstly, what will happen is that the delta of 21.8 will start to go up to close to 40. So you can see here that the $75 option is at 38 and the $80 at 56. So it'll be around 40 somewhere in between. What that means is it means that I've got downside directional risk worth around 40 odd shares. So you can see here, I've got 21.8 delta, which means that I have directional risk to the downside worth 28 shares of Baba, roughly, approximately. So as the price moves against me, the delta starts to increase and my P&L gets hit even harder and harder because I've got more directional share risk in Baba stock. So again, if that happens, there's two things I can do. Depending on if and when that happens, I can roll this position out to a later expiration, roll my put down, and hopefully do that for a net credit. Or what I could do is be a bit more aggressive and sell a call option against my position. Let's say I do the 85 product. You can see here that this 85 call has 30 delta and my put at the moment has 20 delta. So what that means is I will have a 9 delta position roughly in this overall piece. So I could open this trade as a strangle. So this is a strangle position. But because I have a bullish bias on Baba, I'm not going to open the call side. And then you open the put side. But the great thing about trading undefined naked options is if things go against you, there's things you can do to adjust your position and neutralize your delta and pick up more credit at the same time. So hopefully that makes sense of what I'm trying to do is I want Baba to go up. and I'm going to get a maximum of $147, $148. But I'm looking to close this out at around 50%, which is what, about 70, 72, 73 odd dollars. So let's just see where I get filled on this position. So I got filled at $1.44. So I really hope this makes sense for this particular trade. And again, if you want to learn how to become an profitable options trader, then I strongly suggest that you subscribe to my channel. But B, I've got one-to-one coaching where I spend time with you to go through whatever your goals may be, whatever your trading strategy may be, and teach you how you can utilize options to build wealth. So that's the first link in the pinned comment. Love to see you there. Until then, I shall see you guys in the next video.